We've got Makwe Masilela of Makwe Fund Managers, who joins us now to break down those movements. Not a great day on the local Boursa today, Makwe. A couple of laggards that one would note. I mean, what did you think rather, of today's market movements, and did we see any bearing from global market movements?
Definitely we did, and good afternoon to you and to the viewers. I think we didn't do too badly, given that yesterday we closed down 1.6%. Today, in the session, we were down almost 0.6%. So we managed to reverse most of all those losses. But the question here has been issues that we are worried that more cities in China are starting to implement the COVID-19 lockdowns because of the new infections. And also we've seen that the dollar itself continued to grow strong and standing tall as it's supposed to be, not affecting other currencies. Unfortunately, we've seen the likes of the euro, the rand at some point, struggling because of that. But the minute later in the session, we start seeing that the dollar-euro parity starting to fade away. We've seen also stocks as well recovering most of the gains. But investors continue to be unnerved by the issue of a looming global recession. And we can also see that when it comes to our commodity prices. I mean, at some point, your platinums were down almost 4%, your palladiums were almost 5%. So I think it's a question of, yes, tomorrow we're getting the CPI coming out of the US, and people expect that that number might continue to strengthen the case for the US Federal Reserve to aggressively continue to increase interest rates.
Yeah, those global recession fears having an impact on the price of oil, Makwe, trading at around $100 a barrel. I don't know, but I feel like we probably will fall below $100 as long as those recession fears continue.
At some point, we did dip below 100, and I think those are positive news because we know the impact of high oil prices, and also because we know that the demand outlook is not looking okay. It's not only recession fears. If China continues with the lockdown, then definitely that's going to dampen the outlook when it comes to the demand, the oil outlook going forward. And also, OPEC itself, their release of the 2023 outlook is not helping oil prices. And we know questions continue to be the issue of supply and the issue of recession. And here we've got China as well. Remember, this is the biggest crude importer.
No, yeah, let's get some company news in, Makwe. Tiger Brands, they were getting rid of the Ashton factory, the fruit factory, in line with their strategic movements. They weren't able to do that, but now that they are interested buyers potentially, they're going to keep it going for the next season. Your thoughts of the decision Tiger Brands has made, and how it deviates a little bit from the strategy that they had embarked on?
They're taking a very serious risk, but I think they had to do that. Save almost 4,500 jobs. And remember, this is just for now, for this season. And hopefully those buyers become serious and they put the money on the table, because the guys are looking for anything between 200 and 300 million. And anyway, Tiger Brands have told us that they're moving away from this business, and everybody has factored that in when it comes to their profits going forward. Unfortunately, just take them a little bit backward, because it's going to just affect their strategy a little bit, but I think it's for the good cause that let them save their jobs, let alone the town.
Absolutely. Makwe Masilela of Makwe Fund Managers joining us this evening.